Good morning. Great to have you here. It's morning here on the Sunshine Coast here in Queensland, Australia. But of course, I'm speaking with many of you who might be afternoon or early evening right now. So, welcome. Thank you for being here. Just to make sure that you can see and hear me, couldn't hear me before, please pop into the chat box where you're listening in from today. That will make sure that I'm good to go, that you can see, you can hear, and that we're going to have some fun together. Well, fun, insights. Awesome. All right. We've got Jorge from Texas. Thank you, Carrie. We've got Canada. Carolyn, hello. Oh, it's so good to have you here. Thank you for being here. Carolyn from the Gold Coast, Australia. We've done some work together, and wow, it's so wonderful to have you here. We've got Chris from Corpus Christi in Texas. Chris, nice to see you here as well. Wonderful. I'm going to take that as a signal that we are good to go. I just want to start by saying genuinely, I'm so honored to have you here, particularly our USA and Canadian friends. It's the middle of tax season. We normally wouldn't do this kind of promotion or ask you to spend time with us when you're in your busy season, but we do feel really strongly about the intention that there's hope, right? There's help. There are things we can do to improve our business, and we wanted to continue momentum with giving you the opportunity to have some time out for your business, to maybe walk away with some strategic ideas, but most importantly today, at least three pieces of value for you. At least I really hope I hit the mark there. So I admire your discipline and commitment to your continuous improvement. And again, thank you. I intend that we'll spend about 30 minutes together. So I can't wait to hear at the end of this webinar, did it hit the mark? Did you take away some value? So I hope that you'll share that with me as we go. So let's get into it, teams. Just a quick reminder. Today is not about adding more work to your plate, not right now. This is about making sure that the pressures that you're potentially experiencing in your tax season, in your busy season, actually produces something valuable for the future. And so we're going to get into, as I mentioned, at least three areas where we will take a dive into understanding, is there an opportunity for you to make improvements or changes in your business so that next year looks a whole lot different. But first, a quick reminder of who we are and the work that we do. We are the Profit Time Group, which was founded by Rob Nixon, and we've been working with the accounting industry across the world, very exciting, for the past 30 years to help them build better businesses. Our Profit Time planning and program looks at your whole business as it currently operates. And then, of course, we understand what your goals are. Where do you want to go? What do you want to be different? How do you want to change it? And through our 40 key strategies in our 4 headline areas of fix, minimize, scale, and lead, we ultimately help you to take your business from where it is to potentially what we call this investor model. Now, many of the firms that we meet and speak to are currently in what we would call practice owner or business owner level. There's a lot of reliance on you to run the business. You're probably working way too hard, and you might be making some money, but you know that it's mostly, or its profitability is being propped up by you. And so we like to show you the pathway and work with you to achieve where you can have investor level status. This is where you're an owner rather than an operator. This is where the business can run without you, where processes and systems support your people to do exactly that, and really where your people thrive. And that's both your team and your clients because of the way we do business, the way we've set this up, the way this business runs, and how we serve our clients. So our work is actually about helping you create freedom. Whether that's time freedom or financial freedom, hence our name, Profit and Time. All right. Busy season puts pressure on everything. And we know that some of that pressure comes from our clients, or maybe it's for our clients. It could be late information. It could be last minute expectations. Endless questions, lots of client pressure, no doubt. And essentially, while it's not the client dictating this timeline, it is the government deadlines. But we know that there is the clients having that sense of nervousness or anxiousness that they're wanting their returns processed as well, which goes into workflow pressure, probably experiencing bottlenecks right now. Maybe those reviews are stacking up, work's moving slower than we planned, and that can be really frustrating and overwhelming. And I've spoken to many accounting firms in the last few weeks saying, Wendy, we don't know how we're going to get through it. And yet you always do. It might be team pressure. What happens when we're constantly operating at our highest threshold? Fatigue, burnout, those long hours. Maybe you're investing a ton of time and energy to help keep everyone else motivated while you're picking up the balance yourself. The important thing about today is that these deadlines, these pressure cookers reveal opportunity. And that means busy season is going to give us these valuable insights. It's going to give us information. And really, it doesn't stop today. Today is just an awareness opportunity. Today is a time to write down some great ideas, some strategic changes, but we really need you to pick this up again when busy season is finished, and for you to actually make the changes so that you experience something different next. Over the last 3 years, I've spoken with more than 450 accounting firms who have shared with me their challenges and their goals. Many of you solving capacity at this time with seasonal team members, or maybe you're simply surviving a long period of working 6 or 7 days a week, sometimes more than 12-hour days, I hear. And all with one eye on the deadline and one eye on what's going on, burning, crumbling around you. And you're probably thinking, if I can just get through to April 15 or April 30, then I'll sleep, I'll rest then, I'll put this behind me then. The team can take their time off, or they go back to their part-time roles. But what actually happens then is momentum gets lost, because it's this massive peak and then this massive crash. We might return again in the spring or the summer. We ramp up for another deadline, just a couple of short months away. It's rinse and repeat, rinse and repeat. When do we actually make the changes that make a difference to you? And sadly, and also why I love doing what I do, many of you say to me, Wendy, it's got to be better than this, or I'm out. I cannot go through this again. So many of you are considering the sellout or shutting the doors. We know most firms survive this period and then try to forget that it ever happened, and that's okay. I get it. But the best firms, the firms that we work with, they do something different. They capture the lessons like we're going to do today, and then they make their changes. So we're going to work through 3 key areas. First one, pricing, and mostly focusing on where you're underpaid, quite simply. Second one, capacity. Where was time wasted? Where is it being wasted? And third, opportunity. What are our clients actually asking for? If we just make small improvements in each of these areas, the financial impact can actually be really significant. And we're going to run those exercises together. I'm going to prove that to you today. So let's have a look. So first up, pricing. Now, I want to say this in advance to set the expectations. We're going to keep this super simple. I could spend a lot of time going through the mechanics and the psychology and the coaching around value-based pricing. But let's be honest, I only have a small amount of your capacity and attention, and I want to make sure that it's meaningful. So today is about numbers on a page. Today is about quick bullet point ideas on a page that you won't lose, one that you will come back to after your busy season and actually make a plan to make some changes with. So make sure you've got pen and paper or some way of recording this, because I also want to hear from you as we go through the webinar in the chat. What are you coming up with? What are the numbers? What are the ideas? If you are looking for the education, that will come. We will continue to deliver these webinars. You can also obviously work with us in coaching. But the very first place to begin, honestly, if you haven't read Profit and Time, get yourself a copy of it. Make sure it's one of your first reads post-tax season. And if reading is too much for you right now, get the audio. But definitely that is a great place to get the education that's backing up these points that I share with you today. All right. Number one, underpricing. That's exactly what I'm going to call it. And I want to be really clear. Our methodologies don't ask you to raise prices for raising prices' sake. In fact, it's quite the opposite. On the last webinar, I took a poll with you all and I asked what was the standard minimum individual tax return pricing that you had determined this year. And there was a variance from $250 all the way to $2,500. You charging the lower end of the scale says little about your product, but it says a whole lot about your value perception. Same product, same city, very different price. Many of you tell me your locality just won't pay city prices or big firm prices, and that might be true. But how is the return that you produce with your team any different to the return that they might produce with their team? And really, what's stopping your team members from leaving the current locality for bigger fees? We must educate our clients on the cost of doing business instead of lowering to meet the demands or the standards there. If they don't want to pay your increase of $50, $100, $200, then let them. Let them find cheaper elsewhere. There is a real ever-growing supply and demand issue with these individual tax returns. More and more firms are saying no. More and more are selling their parcel. And so if your client wants to go and find somebody who can do it cheaper, I would rather retain my best talent with quality business practices and setting a standard of what we're worth than lowering my price for that client. So the question here is, where did you work too hard for too little this season? This could go a number of ways. It could be straight up in your pricing. Are we just quite simply not brave enough, not confident enough, haven't charged enough? Which jobs blew out? I'm sure you already know that there's some, and maybe there's still a couple more. Which clients had you leave the day thinking, this is just not worth it? It's just not worth it. So I want you to go ahead and put a number to this. Now we're going to do this together. I want this to be a running tally. If we were bold and in an empowered frame right now, especially while we're in it and we think ahead to next year, what price might we increase our fees by? Perhaps it's to say, and there's a couple of different ways we could look at this. We always encourage an analysis, a fee analysis, before you go and make these decisions. As I said before, this is not raising prices for raising prices' sake. But what if we've got 50 jobs underpriced by, I don't know, $500 each? What's that worth? That's $25,000. That's a quick win right there. $25,000 to hit the revenue. What if we just decided all fees will be raised by 20% next year? No questions. Not CPI, but 20%. Why? Because we haven't raised prices in 5 or 10 years. Because we actually took the time to sit down and look at the costs in this business and to look at the value of the return that we're delivering and what it means to do it in such a crunch time. What's that number worth to you? So I hope you're doing some maths here with me. If you're $1 million firm and we raise prices by 20%, your accountants, I don't need to ramble here, but it's $200,000 just from one strategic decision. So what's your number? I want you to write it down. Idea number 2. Where are you giving revenue away? Often we see it through write-downs. This is money that you actually earned or your team actually earned, but you decided not to collect. Why? Well, that usually points to clues of what we need to solve. But usually it's an efficiency or a time issue. Could be a self-worth issue as well. Particularly if you're billing in arrears, we get to the end, we take a look at the time on the job and we go, oh no, the client wouldn't pay that. But you set the charge out rate and you put the team member on it. So what in that equation are you saying is wrong? Is the team member wrong? Was the charge out rate wrong? Was the time we spent on it wrong? Why are we not billing it? Now, we're not about billing in arrears. There is rare times and places for that model. But again, without going into the big lift over the education of pricing, the book will do that with you, or we can do that with you. I just want you to think about that. Why set charge out rates in the first place if we're just going to write down? So a quick calculation here too. How many hours or dollars did you write off this season? And I want you to be honest. Maybe off the top of your head now because you're here with me, but maybe you'll go away and run a report on this and just sit with it. You did the work, you carried the costs, but you just didn't get paid. So a micro goal or a mini goal here might be, what if we could reduce that by 50%, that number? Now, in our work, when we work with our accounting firms, we have a zero write-off policy. Why? Because we change the entire pricing model with you. We help our owners and our teams understand pricing differently. You'll need to know how to achieve zero write-off, of course, and the whole team will need to be on board. But today is about the opportunity over education. So what's your number? What do we write off? Third idea, inconsistency. What I often find when firms first come to us is that there's no consistency in pricing, no minimum standards, no pricing formula. And truthfully, if you don't set your minimums, including your scope, your clients will dictate it. They'll dictate it through those questions. They'll dictate it through those, oh, I forgot that I had this or this changed. And, this is while we're putting time on the clock and time's getting away and the fee's a lot bigger than what it was last year. And all of a sudden we're writing down again. We have to change the model. So a question here to help you put a number to it. How many low fee clients do you have? This is a great one to analyze. Also, how many clients in this fee bracket? How many clients in that fee bracket? Really have a look at the breakdown of your revenue. So what would it look like if you doubled your low fee clients? Just double it. What does that give you? Say we're adding $400 on 30 clients because you're going to do your analysis here. That could be another $12,000 to your bottom line. Now, on those numbers, sure, it's a lower amount, but this is about strategy and this is about value. Again, I really want you to take some time, number one, knowing your numbers and analyzing them, but secondly, the mechanics behind this. It will give you confidence. It will give you courage to actually charge what you're worth. And that's what this is about. So what's your number? And I decided to add in one more. This one, well, maybe I didn't add in one more here. Maybe I changed it. Just going back on the slides there. So you got three numbers there. Underpricing, write-downs, and your pricing gap. Have those added up because that's your quick win revenue sitting right there. Now, if you've got that number and you're happy to share, I'd love to see it in the chat. I'm super curious. I also want to make sure that my maths is mathing for you at this early start to the day, but I want to make sure this is a value for you. So what kind of numbers are you coming up? Just doodling with pen to paper here. Next up, we're going to talk about capacity. Where did your time dissipate or drain? Because we know busy season exposes friction and frustration. And this one is less about numbers, but more about ideas. So as I go through these keys here, I want you to jot down just in bullet point form what you're experiencing or what you're noticing, which will give you clues for what you can improve. So firstly, client signals. What are we experiencing? Are we hearing complaints? What kind of demands? I'm sure there's particular themes or topics on replay. Do we know, gut feel? We've got too many. We just cannot service this. Doesn't make sense. So when was the last time you culled some? Are we saying no to them? New client inquiries, we're saying no. Do we have too many or not enough? Maybe you want more clients. And so it could be that it's not a pricing strategy or a capacity strategy for you. Maybe it's a marketing strategy when you come out of this busy season. So write these things down. What's the biggest concerns, or what are you noticing around your capacity, particularly from clients right now? Where are we being drained? And while you're coming up with those ideas, I ask you, what's your process to review client friction at the end of this period? Are you putting notes on each job progressively as you go? Are you using classifications or categorizations on your client base in your CRM? Are we applying flags or utilizing reports? Purposely pausing here so you've got the opportunity to make some notes. You've given me your time. I want to make sure you're using this and can come back to it. Next up, workflow symptoms. What's your workflow process? Is it documented? Well, we should start there. And if it is documented or isn't, but where are we falling short? What's missing from your workflow process? Likely it'll tie back to the client symptoms. I dropped my work off. I haven't heard from you. Where is it? Will it be done on time? Well, if we had a ongoing communication schedule through our workflow process, the client wouldn't need to call. Where are we experiencing pain points in the workflow? Are there bottlenecks? That's usually the obvious one. We're getting jammed up, whether it be at the review stage or at the getting the job out stage, or maybe we just can't get all the client information, and that's where the bottleneck is. How about this one? Are we getting paid? Now, I know your billings are higher in this first quarter or first tertial of the year, but what's your accounts receivable looking like right now? Again, our methodologies say there shouldn't be accounts receivable based on our pricing structure. Do we have time budgets on all jobs? Could we communicate to our clients better? I hope you've got some ideas here on paper for what kind of workflow symptoms you're experiencing and areas that we can come back to and focus on. How about focus frustrations? Let me explain that one. Are the priorities clear for the entire team? Now, it's quite obvious, work in, work out, deadline. Yeah, it's that simple, sure. But what else might be going on? How's the energy? Is there fatigue? Are we being constantly interrupted? Can we lower that? The team are working really hard. When a phone call comes in, are we putting it straight through, or are we actually scheduling time to call that client back? What ideas would help here? Let me put it this way. What are you going to continue to tolerate, even though you know it could be different or better? Because that's what needs to change. We shouldn't be tolerating anything. This should be our business, our rules, our design. Where do we need to set some new boundaries or expectations? Here's my fourth one. It wasn't on the previous slide, it was here. Systems issues. I threw this one in as well. Often, this is an energy drain or a time drain. Are our systems, processes, softwares working for us? Are we well trained in them? Are we continuously improving what they can do? Every time the software gets an update, are we applying that? What's our process for development? Do we have standardization throughout the entire organization, as in we are one business operating one way? I know it can feel really overwhelming when you start to actually see the challenges and jot them down, but I assure you that it's worth solving them and just one at a time. We just have to start with one. Because the whole objective of standing here with you today is to let them come to the surface so that we can see them clearly. Think of the challenges as your opportunity. This is where we can make improvements. And I've only given you 4 headlines here to brainstorm with. There is heaps more, but just 4 relevant to what we would be experiencing right now. Just so I know you're all still here, still listening, still with me, give me a yes in the chat if you've got a heap of ideas so far. Just a yes. Pop a yes in, and then we'll move on to the third piece. Good. That's great, Radka. I'm glad. Hello, Brad. Good to see you. Carrie, good. Great. Thank you, team. Good to have you here listening in. So let's go to the third one. Hey, William. The opportunity. Busy season puts everything under pressure, right? Into a squeeze. And I heard this saying, I loved it. When we squeeze an orange, what comes out? It's orange juice, right? When we squeeze in more meetings, more jobs, what comes out? Well, whatever's inside, right? If I'm frustrated, frustration's probably going to come out. But when we're talking about working with our clients and we're in a period of higher intensity conversations, more touch points, more connecting in, inevitably future opportunities are revealed. There is opportunities to improve, as we've just gone through, ideas for what people want. And this next exercise, I want you to have a running calculation. So again, pen, paper, calculator, whatever it is you need. Because the first one, we're going to start with a simple question around creating capacity. Now, capacity really comes from 2 places. We either hire it, get more people, more hours, or we get it from efficiency. And it feels like hiring is the quick win. Shit, we've got lots of jobs. We need to do more. Let's hire another person. When in fact, you might not need to, because capacity also comes from creating efficiency. So on that previous slide, we just come up with a heap of ideas to improve things, to make things better, to give us some more time back. It could have been improving communications. It could have been less interruptions, using scheduling more. And what if we were to implement them? Added to that, the systems improvement. What if we could use our systems and our tools more fluidly? What if our people were developed further, trained? What if our processes were tidied up? How much more efficient could we actually be? So I want you to now take a number. Could I be 10% more efficient, the team and I? Could we be 20% more efficient? If we really committed this year to focusing in on sharpening up some of these ideas you've got, what's your number? 10 or 20%, 30%. Gosh, I've had people sit in front of me and go, Wendy, it's 100% for sure. I'm like, all right, that's a lot. Let's just start with what we can see right in front of us. So you can be overambitious here, but I also want this to feel achievable. So now you've got your percentage. Let's turn it into some hours. So quick formula, I want you to take your total number of fee earning team, maybe that's 8 of them, and I want you to times that by your standard hours. So I'm going to use 2,000. It's easy for me here. 8 team members times 2,000 hours. It's going to give me 16,000 hours. That's what we're using or what we've got right now. If I apply my efficiency increase, it's a guess, it's a gut feel, right? If I apply 20% to that, I've got 3,200 new hours, 3,200 available hours with the same team. I don't need to hire another person. We just need to get better. That's a cost saving right there. So your biggest question to answer today is, what are we fixing? How are we fixing it and by when? Because surely that number, and look, there's a lot of people on this call and there's going to be a lot of variations here, but surely that number's worth it. Now, we're not all about greed here. It's not all about hard work. In fact, we want this to be the easiest journey. So those 3,200 hours in my calculation, what are we going to do with them? Maybe you want to give some of that back to the team. We've got teams with 4-day working weeks, flexible arrangements. Maybe you want to really focus on how you use that to do something new. Let's be really smart about it. So that's a good number. How many hours is it for your business? Number 2, let's add more value. What are your clients asking you right now? Remember, I said higher touch points, more intensity of conversations, more connection. What are they signaling? Are you listening close enough to when they're saying, oh, this isn't going well, or I'm worried about that? That's all opportunity. When we're listening hard enough and actually present the opportunities to the clients, you're presenting solutions to them. You're saying, I can solve this problem. And here we go, another calculation. Say you can solve people's problems and we decide that's worth $500 an hour. Maybe your number's different. I'm setting the benchmark here. New services, solving their unique challenges at $500 an hour. And now you've got 3,200 hours freed up. And we could sell all of those hours if we could sell all of those hours. That's a whopping 1.6 million, my calculations, right there. So I want you to do your number. Your available hours, maybe you halve it, a third, a quarter, whatever, times by an hourly rate to deliver new services. What's your number come out to be? It's quite likely you're going, this is great, these numbers are good, I just can't cope with this right now. Or maybe you're really excited and you want to know more. Either way, it's great to have you here. But I wanted to say, if you can't, the clients are talking to you and you're feeling guilty or bad. I mean, so many of you tell me, Wendy, we are leaving money on the table every day. We just simply cannot get back to people. Or what's in the opportunity pipeline, but right now that's not a priority and that's not the way it should be. That is your future revenue. That is your opportunity. If you can't get to it, hire someone who can. But right now, here's a little concept I want you to have. I want you to bam fam the gap. What does that mean? Bam fam means book a meeting from a meeting. Right now, this client is in front of you, sharing something with you, and a little bubble goes off in your brain and you think, yeah, we could help you with this. But I can't do it right now. We are too busy. I've got no one to hand it to. All of those thoughts go through your head. That's okay. Get your script. Hey, Joe, this sounds like something we should really talk about. And I'm wondering if it'd be okay if we could table this for discussion in May. Could we set a meeting for that now? You've just bam-fammed. And the gap, well, you would have heard, and you can go along to our website and download a really cool sheet for this. We call it a gap meeting. We understand the client's goals and what their achievement process is to achieve their goals. Often they don't have one, and that's where you step in. So we call it the gap meeting, goal achievement process. So bam, fam, the gap. Client's got a challenge, client's got an issue, client wants things to be different, help them. Book a meeting from a meeting. So I hope you'll play along. I'd love to know what this season could actually be worth, what it could create for you. I would love you to share your number, even if it's a rough number, feel free to round it up, whatever. But I also want to make sure that this landed today. I want to make sure that my math worked out, but also that this process helped you and that this time together was actually valuable. So first one, we talked about pricing improvements, raising your prices, billing the write-offs, and even charging for those quick questions, those, hey, have you got a minute? I've got a really quick question. And you end up giving away years of advice. Maybe we didn't calculate that number, but let's factor that in too, what you're not getting paid for. So what's your total there for pricing? And by the way, we'll see if we can get a running total. Oh my goodness, 2 million, Carrie? What the heck? You need to get off this webinar and go and make that happen. 1.8 for Jorge. Wow. Okay, I'm blown away. This is awesome. I think my job here is done. Okay, pricing improvements. What's your number? Good job. What about your capacity? Now you can give this to me in hours or dollars. But your capacity recovered. And by the way, maybe you just want to give me a total. Total is fine. What might our hours represent financially if we actually utilized them? If we could get efficient in the stuff we don't need to be being bogged down in and actually use that time wisely. Advisory opportunities. These numbers are real. They're your numbers. We just use the formulas here loosely in this environment, but certainly part of the planning work that we do with you is about showing this to you in a more concrete environment. And then, of course, the planning is backed up by the methodology on how you actually achieve these numbers. So it's likely you've got a total here. And this truly is, okay, good. Thank you for clarifying, Carrie. Carrie's total for the 3 was 2 mil. 2 million of opportunity. Now, I know hiring can be a real challenge, and we've talked about that on previous webinars, but I'd be having a forever hiring process if it meant I had $2 million to go tap into. Mark Brown, 750. This is excellent. This is the real hidden value. This is untapped potential. And I'd have to say to you, why would you not go chase that? Because the best firms, the ones that we work with, they don't just survive this season. All of you survive it. I really feel for you. It's very different here in Australia. But you will take this opportunity to extract lessons from it and apply it. And the most important thing is what you actually do next. Now, you are welcome to get through to April 15 or April 30. I promise you, we will not hassle you again with another webinar. Not before that. But what happens after April 15 matters more than reaching April 15 because you've got these numbers in front of you now. And there's a short window after that tax season where we should be sitting down, where the ideas, the pain, the sleepless nights are fresh. And we say, what went well? We celebrate that. What could have gone better? And what will we do differently? Now, you have an opportunity to work with us at our next 2-day business planning workshop. If you want to understand more about these numbers, if you want more concrete numbers, and this workshop is designed to turn exactly the concepts and more that we just worked through into a clear 12-month plan. And we also go further out to 3 years and 8 years. So this is like your next business decade mapped out in a planning document, all underpinned by formulas and methodology and a ton of information. And so if today has really sparked something in you and you think, you know what, I really need to get in front of my numbers. I really need to know what's going on. I really need to do a better job of this. I want to go tap into that $2 million. Then maybe you should consider the workshop. It's just a workshop. You can decide after that if you'd like to explore working with us, but it's a 2-day, 4-hour each time workshop with us to get that real solidified plan. You walk away with a ongoing big planning document. It's got about 10 tabs to the document and it builds upon itself. You also get a 1-page plan that you create. You're doing this with us live in the workshop. And you get the next 4-month action plan mapped out. So you will know exactly what to do from that May through to September period to start to improve your business, the challenges that you're experiencing, the numbers that you're achieving. So if you're more than $1 million in revenue and you're 1 to 5 partners, we'd love to have you there. You're absolutely welcome. So scan that QR code. I possibly can pop the link in here. I think Brian might be on the call. He can do that too. There we go. I've got a link in there. Thank you, Brian. Brian's link looks better than mine. Appreciate having you here too, Brian. Brian's in the Philippines and it is super early there, but he's gotten up to join me and I'm so grateful. So thank you. But teams on the call here listening today, if that is of use to you, please check it out. Just at least spend 5 minutes checking out what that workshop might provide for you. And of course, we would love to see you there. It's an opportunity to work with both Rob Nixon and myself over those 2 days at the end of April. Final thought, the cost. The cost of inaction. We often think about the cost of doing something. Maybe it's our time. Maybe it makes us a little nervous, anxious. What if it doesn't work? What if I feel like a fool? What if I put everything in and it doesn't quite pay off? But really, I want you to think about the cost of doing nothing at all. And hopefully you played along with those calculations today and you've got a number. That's your cost if you choose to do nothing. I don't know. I don't think it's worth it. I think you should go for it. So teams, I've given you 42 minutes of time, a timeout, a break with me today. It's my pleasure. I'm really grateful for every single one of you being here. And so from me, I've been excited to walk through these ideas and calculations. I want to wish you the very best between now and when we work together again. Take care and know that everything we do here is about helping you improve your profitability and decrease your time. So all the best with it. If we can help you, please reach out. Otherwise, we'll see you next time on the next webinar, sometime after tax season. Take care, everyone. Talk to you soon. Bye for now.